All right, welcome back. I'm going to do our third order. We just did another one. Let's get another order in here before trading tomorrow. And just a reminder, this is an exercise where we're going to plan 30 trades, knowing exactly ahead of time what gets us in and what gets us out and the size of the trade. So we'll just get this order set. I won't babble too much this time. It's going to be the same type of situation as the previous order in Len. And so again, I'm a swing trader. I'm trading swings. And a trading plan is very simple. Like I said, objective method, where you're going to enter, position sizing, and documentation. A lot of the work goes into fine tuning your method and your rules for that. And once you get it all set, it's pretty easy. It takes me all of a few minutes to size up a market, right? See if it fits my setup, and then make a plan. It doesn't take very long. I don't have to spend all day and night analyzing it and worrying it over it. It just, once you do things consistently over and over and you focus on that one thing rather than jumping all over the place, it becomes rather focused, and you can begin to see nuances and details of actual price action. So let's just go ahead and do this. I'm going to use this fib retracement tool. And again, this is just simple. It's breaking things up in 25% and 50% and so on, right? Used as a risk reward. Now, if I was to be doing a limit order, I would have set a limit order ahead of time and probably been going to BE. But this is more of a confirmation order. It's going to be the same plan and management. So let's just go ahead and plan this out. All right. So I'm just going to make a note here that it's more of a confirmation. I use one of two entry types, confirmation or just a resting limit order. So I'm just going to make a note, 1R, that's what I call the confirmation type entry. And I'm going to know exactly what I'm doing. So what I'm going to do is I'm going to let the market take me in at 50% of this reaction leg. She's going to take me right in, okay? So I'm going to place a buy stop limit order at the 50 line and place a stop here. So I can look and I can see exactly where I need to go. It's going to be, what, 33.35? That's my entry. And my stop is going to be, I do it by 25% of the reaction leg. It's going to be 31.58. And the management's just going to stay the same once I hit 2R, meaning a risk unit is going to be my risk unit. Let me just go ahead and put that up here so you have a reference. So I'm going to use my fib retracement tool, which I have a template for risk reward. It's going to look something like that, right? So I'm going to risk 1, and I'm going to try to make 6 out of this. When I hit 2, I'm going to move to break even. So I'm going to move my stop from here to here, and then I'm going to trail it by 2R every single time. Set that to the side, finish making our order. Now, I have a particular routine I do, which is part of my documentation. So I'm going to enter it into a spreadsheet so you see our current orders that are pending. So today is the 24th. You want to know exactly what you're doing when you're doing it. So I'm going to have documentation on the chart. I'm going to have documentation here, and I'm going to have documentation at my particular broker. So here we're doing IoT. And again, this isn't about stock picking or being right. This is about trade planning. So I know I'm going to enter at 33, 33.35, this line right here. I know where my stop is, 31.58. And it's going to calculate 282 shares. This is the type of setup I'm using. 6 to 1 is going to give me my target. And TradingView's risk reward tool does a lot of this for you. So it's a nifty little tool. Just visually shows you everything you need. Put your stop where your stop is, put your entry where your entry is, and put your target where your target is. And again, it's not about the particular trade winning or losing in particular. It's about making a trade plan. It's about learning to be consistent in what you do. Okay. Now, here's how this particular trade works. I need the market to take me in. If the market hits this low before it takes me in, I cancel the trade. If it takes me in, I just execute it according to plan. So let's go ahead, and I love TradingView for this. I can create a limit order off of this. I just want to do it, make sure to tighten it up and do it exactly as I need to do it here. So 33.35, that's correct. That's my entry. And so what this is doing is setting a bracket order, meaning it's going to put my stop in at the same time and my target in. 31.58. It's good to have redundancy in all of this stuff. Let's make that exact. It's going to be my stop loss. And my take profit is going to be 43.97. So I just double check everything and make sure, right? I'm going to look and see how many shares is it giving me. 287. What did I come up with? 282. So let's put this risk to exactly 500. And there we go. We're getting a little closer now. Let's see what's going on. 282, 282. I don't need the rounding there. All right, so everything looks good. Let's place this, and it's always going to be a day ahead of time, right? Never, don't be doing this in the middle of the day. If you miss it, you miss it. Always a day ahead of time. That's part of the exercise. So I'll place a buy order there. I'll just check it over here. See everything's lined up. And even when I'm done with this video, I'll turn around and double check anything because I tend to make a few mistakes here and there, especially while I'm talking. Let's close that up. All right, so that trade is planned. And again, I mentioned in the prior video that I'm already planned for 30 losses in a row with my position sizing. I'm planned for that ahead of time. I'm not stepping and fetching after the fact. I already know if I lose all 30 in a row, I'm going to lose 15% of my account. If I don't like that, I lower the size to whatever it is I like. So I'll be doing more detailed things on position sizing at some point. But it looks like we have some time to talk about a few other things here. So let's go ahead and talk a little bit about market structure, which is just price action. Basically we see a market and it just looks like chaos. So we structure it. I'm structuring it into swings. At some point so this is how I see the market in waves, in little waves and big waves, minor and major swings, one way or the other, whether it's going up or down. And, to be consistent, you have to do things consistently. So this is a simple way for me to view markets. And so what I'm seeing here for this trade is I'm just doing a swing trade. Boom, boom. And I'm using a particular setup with conditions to enter it with a very advantageous risk-reward scenario, meaning I'm going for 6. I'm only risking 1. I'm going to lose a lot, but when I win, I'm going to make 6. So let's talk about our simple swing here for a moment. So the plan's in place. Let's take this. I think I already made a... All right, so I'm going to put some definitions down for the components of a swing. All right? So a simple swing is like this. Boom. A new high confirms the swing low. Now, if I were to get a little more granular, okay, and take this apart, I'm going to take it apart into its components and its process. So what we have over here, this is going to be called the impulse leg. One of these days I'll get a handle on all the trading views things here. That's going to be the impulse leg, and over here is going to be the reaction leg. So basically, we're trying to put some definitions to some things so we know what we're talking about. So impulse leg, it's impulsing up, right? Generally, it's taking out a high. It's moving in a direction. It's showing some intent. Don't worry about all the technical analysis. Mostly, we're trying to see things in terms of buyers and sellers, supply and demand. And all the reaction leg is the pullback. Okay, the reaction leg is just the pullback of that. It's the reaction after the impulse. Now, swing trading, what we're trying to do is say, all right, the market made a new high. It's going up. As it pulls back, the overall direction is up. So I want to buy the pullback because the overall direction is up. So let's take apart this thing in a little bit more detail. And we'll make that a little bit bigger. Now, as I want you to think in terms of buyers and sellers. As the market goes up, all right, so let's say we have this impulse leg here, right? It's taking out a high. As the market goes up, it's running, it's running, it's running, right? You don't know where it's going to stop. I don't know where it's going to stop. I don't know if it's going to reverse, but it's running. Buyers are all of a sudden really happy about this. At some point, these buyers are going to slow down, okay? At some point, the buyers will quit taking it up and they'll start to slow down, right? The price will start to slow down. Your indicators will show this. And this is what I'm going to call a shelf. It's just an impulse leg shelf. And very simply, don't get hung up on things. All it's showing me is where the last set of buyers gave up, period, the end. So as it goes up, it starts to slow down. See, it's slowing down. It's not going straight up anymore. It's starting to make what I'm just going to call a shelf. So you can see I can take my shelf and put it here. I'm just going to put a box to represent it. And again, what we're doing is we're putting structure around what seems like chaos. And you'll notice at some point, see how, right, these buyers give up and it comes down. Now, as it comes down, if it's to swing, it's going to do the same thing. It's going to start to slow down, right? If it's going to, and it's going to make a shelf over here before it tries to go back up again. And that's just a function of, okay, anybody who bought here is now protecting profits. Plus anybody who thinks they want to be short, they're encouraged to get short. And so now everybody's leaning on the other side of the boat. And then at some point, some buyers step in and start to turn the ship back around again. And all we're going to do is label that as the reaction leg shelf. Now, don't get overwhelmed. All I've done was taking a simple swing with an impulse and a reaction leg, and I've made some finer distinctions in it so that I can build some methods off of those distinctions, something that you'll see in every market. And it's these shelves that I often use for my setups. Why? Because here this shows the last bit of sellers that said, sell it, can't go down, sell it, can't go down, sell it, can't go down, sell it, can't go down. Boom, we give up. This is my last known sellers. And so I'll be leaning on this. This is also my last known buyers that flipped. And so there's often interaction when you see this. So for instance, now we start to slow down, and we're going to make a shelf in here as price tries to turn. I'm not forcing it to turn. I'm just, nope, so not yet. And you'll know, right? Boom, 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 bang. See that bar? It's flipping. It's doing this. It's flipping around. And so it's these kind of shelves I'll use for, see that bar after the, so, what I've drawn, so let's just call this one swing, and then come down, and it slowly starts to make this shelf. And you can see by the size of that bar, whoosh, that it's starting to turn, and the balance of power has shifted. Nothing special, it's just viewing what's already there. But it's these two shelves I'll use the interaction. Generally, price will bounce off of this. This is what often people will see as a cup and handle type thing, or sometimes it just zooms straight through. But there's usually some kind of interaction between these two shelves, as you see here. And so, just quick definitions: impulse leg shelf, reaction leg shelf. And my methods are just based on the interaction between those shelves. The smaller the swing, like you can see where it turned, right? My shelf is sitting here. And the 25% line is trying to represent that in some ways. But it's making it very, very objective. All right, so that was just a little bit on the components of swings. And, sometimes it's easy to see, like if you look here, it's very easy to see. Where's my thing? Right? You come up, see it stall, see it crack, and then you see it come down, see it stall, see it crack. Don't try to like memorize rules for this. Right? See it stall, see it crack. Now, if you look, there's a rhyme and a reason that thinks it's just buyers and sellers. So watch what happens when it cracks. Zoom, pull back to it. Watch this one. At the bottom of the shelf, zoom, remember that bar? Pull back to it. And so it's kind of representing where this reaction leg